All right. For this week, we have something slightly different. I'm Arthur Petropoulos, managing partner here, Hillview Partners, a lower middle market M&A capital advisory firm, helping companies generating roughly $1 million to $10 million in EBITDA, sell their companies, find capital. And after the resounding sentiment from everyone who watches our videos that we'd like to hear someone else talk besides just you, Arthur, we are lucky enough to have a good friend join us in today. And an actual managing partner of a private equity firm. So when we talk about companies, people that we sell companies to, or people that are looking at companies, and we always say how best to position the company, what they're looking for, what they're not looking for. We figured what better way to do that than to just hear it directly in most likely and almost guaranteed a more eloquent manner than I can. So today we're lucky to have Matt Burpee, the managing partner over at Kepler Capital, join us in the show. And we're going to, for the next half hour or so, and we'll split this into 2 videos this week, berate him with questions and get all of his wisdom that we can on middle market and lower middle market deals. So Matt, I do appreciate you joining in and subjecting yourself to this today.
Yeah, thanks for having me, Arthur. I think you put a little bit of pressure on me, calling me eloquent, but I'll do my best.
All right, very good. So the thought is we have 20 questions or so, and any others come up as we're chatting, we'll add in a few bonus ones. I figure we'll just run through these, get your thoughts on deals, on companies, on the process, and all kind of the good, bad, and ugly in between.
Sounds awesome.
Very cool. So question one's a simple one. Just tell us who you are, what you guys do, abbreviated view of the universe.
Awesome. I always like softball questions to start with. So I'm the managing director and founder of Kepler Capital, and we're a private equity fund that does majority acquisitions of businesses in the lower middle market. So for us, that's anywhere from $500,000 up to about 5 million of EBITDA. And we buy companies anywhere in North America. I'm actually sitting in Calgary, Alberta, up in Western Canada right now. We have one company in Edmonton, 200 miles north of me, and we have another one down in Florida, some 2,500 miles from me. And we've been doing this since 2018. We raised our first private equity fund December 2018. We've since raised a second fund, and over that time, we've acquired 9 businesses with 3 more in progress as we speak. And the premise of what we do is to try and take the traditional private equity model and bring it down to a smaller size business and effectively acquire profitable, long-standing owner-managed companies, buy majority ownership, and help those companies continue to grow and build off the existing legacy. And we've been doing that for about 6 years now.
Very good. No, that's good stuff. I guess that kind of dovetails into the second question is why the middle market? And so people say, okay, on one end of the spectrum, you've got a guy buying a business, and on the other end is KKR and Blackstone. But what about the middle market or lower middle market do you guys find kind of really appealing or captivating?
It's an interesting question. When I first started, the whole thesis was we buy companies in an awkward size range, too big for an individual buyer, too small for private equity. And as a result, you can find exceptional businesses that are misvalued, that are undervalued. That's still true sometimes, but now with the increased popularity of search funds and just the increased activity of private equity down in our end of the market, it is more competitive than it used to be. But what I like about it is you can find businesses that are hidden gems. They're building a unique widget, and they're the only ones in North America that build this type of widget, but you'd never find them if you were focused on a larger scale business because their segment is not big enough to be attractive to larger organizations. And those types of companies are exceptional companies, and they're out there, but they're only a fit for a group like ours that focuses on this segment of the market. That's why I like it.
Makes good sense. And so I guess when you're looking then to take a step further, you're looking at companies that are for sale. What makes a company buyable? And we'll dig into kind of like the different parameters of a business. But when you're looking at just like pitch book from Hillview Partners or some other firm comes across your desk and say, all right, this is worth digging into more or pass. What's kind of some of the very, very kind of headline differentiators in that regard?
So I think the first really important check marks for us is profitable and long-standing.
Sure.
We're not buying turnarounds. We're not buying startups. We're buying companies that have been around a long time, that make money, that know what they're doing. When you go one layer past that, in this end of the market, it comes really down to people, systems, and processes.
Sure.
Do you have a team in place? Do you have institutional knowledge that runs through the organization? Do you have middle management? Is there a single point of failure somewhere within this organization? And if you can get comfortable with all those factors, then you keep looking.
Sure, sure. No, that's good. I appreciate that. And this flows well. And I don't even think I sent you the questions beforehand, as considerate as I am. So we always kind of think of, and I agree with the sentiment relative to processes, because even when we're representing companies, we're kind of looking at the same analysis. We always say kind of like people, process, product. But in processes, we always kind of break it down to kind of like sales, execution or fulfillment, the people doing the stuff, and then operations as to kind of like what does the infrastructure look like. But relative to the sales process within a business, if you're looking at a company that does a thing, how do you evaluate its sales process? So if you're looking at a company and saying, is it good, is it bad? And you're zoning in on just how they do sales, what makes you think sales is good or bad? Or what's green flags and red flags in that regard?
Sales is, I find, one of the last roles to get delegated as companies grow. And so it's very common that we see a business in our size range where the CEO is also the head of sales and the founder, in addition to all the other things he or she does. That's okay. But a really big check mark from us is a company that has a sales team and they're employee salespeople. They're not
Sure.
owner, founder salespeople. That shows that the processes have been put in place and that you have a repeatable system that can drive growth even after the founder exits, assuming that that's the scenario. Beyond that, we like to see some level of key performance indicators that get tracked on the sales side. Companies where the founder can confidently tell us, how many leads are we generating and how are we converting them throughout the sales cycle. That gives us a lot of confidence that it can be repeated. But I think the last piece is just getting an understanding of what's driving sales. I've been talking a lot of the more outbound outreach type sales, but sometimes it's word of mouth. Sometimes it's referrals or channel sales. The key comes back to how resilient is this? How repeatable is this sales function if somebody were to leave or something were to be disruptive?
Sure.
And consistency and repeatability is the key for us.
Yeah, no, that makes good sense. And we take a very similar approach in that it doesn't have to be everything, but it has to be something, right? Like the answer shouldn't be, I don't know, the phone rings, or people they like our stuff. And
Yeah.
it's nice. I mean, to some extent, I think there's always this perception from companies that they have to have everything like completely buttoned up. And we say, look, if you were to say you've done everything perfectly and you've kind of hit this amount of EBITDA, then that's not really a good narrative, because it means there's not a whole lot of more juice to squeeze from the lemon. But if you've done most of these things right, or it's kind of, you have the nebulous kind of like orbiting, and now someone can kind of come in and really tighten it up or accelerate it, if you will, then that can be a good position to start with.
I completely agree. I think the ability to take what's already working and invest more into it is the opportunity for the buyers like us. Oftentimes, the seller founder is pretty risk averse and
Yeah.
may not be at a stage of their career or life where they want to make larger investments. But as a new buyer coming in, we just want to see that the foundation is there that allows us to do that confidently.
Right. No, and that's a really good point, because actually when people are running their own companies, the ROI that I think they require to make spend, particularly in the sales process, has to be like enormously high, where it's like,
Yeah.
if I put $1 and I need $5 back this year, whereas if an investor comes in and they say, okay, we can put $1 in and it kicks us back, 30% ROI, that's a meaningful return, kind of incremental to, alternative means of deploying capital.
Absolutely. But you
Yeah.
have to be tracking those metrics and have confidence in them.
Yeah, what do they say? You can only improve what you can measure, what you do measure. All right, and I guess how would you apply that same lens to kind of the execution or fulfillment part? So if you have one side of the business that's kind of selling the product, service, or offering, and you have the other that's doing the stuff, providing the service, manufacturing the thing, how do you kind of look at that and say this is good or this is not good?
I think it's similar in that we like to see that there's a team in place that have the right systems and processes to keep doing what they're doing on a regular basis, and to understand what makes their functions successful and to measure and track that success. That's often not in place, frankly, in the businesses that we buy. But one of the steps that owners can take that I think is really valuable is having a director of operations or VP of operations, somebody who really owns the day-to-day operations role and allows the founder, CEO to be more strategic and more growth focused. There are some companies we've bought that have put that in place many years ahead of selling, and that goes a long way. I think it takes time to do it properly, but if you find the right person and get them firing on all cylinders, it really frees up the owner to drive growth.
Yeah, that makes good sense. And then I suppose pivoting to that kind of third prong. So if we say sales, fulfillment, and administration, when you're looking at the operations or administration of a company, and then kind of more broadly, I guess, management, how do you kind of evaluate management? Or like, how do you come in? And obviously, if, everyone's just driving donuts and Ferraris in the parking lot, you say, I don't know about this. And, on the other end of the spectrum, you got guys that are just, printing money all day. But most of life kind of exists in the gray. And so when you come into a situation and you're evaluating management, what are some kind of things that you look for in that regard as well?
Yeah, I think on the administration side, usually the companies we buy are too small to have a CFO, but they will often have a bookkeeper who may also be an office manager or some other type of administrator. The quality of that person in the company is so critical. And it's less about the title, it's less about the years of experience. It's really about the person. And some of them are excellent and some are less so. And it just comes down to how detail oriented are they, how well do they know their numbers, and how do they interact with the CEO founder to give he or she the information they need to run the business efficiently. So that's how we look at the administration side. From a management standpoint, more broadly, what we want to see is really just the existence of management. If everybody reports to the founder CEO, that's scary for us. That's a business that's not as operationally mature as we would like. At the same time, a business that has a vice president atop every function is probably not practical for the size of business.
Sure.
And so you have to prioritize. Oftentimes it is that director or VP of operations that's the first critical hire, and then it might be sales, and then it might be administration. But we want to see some effort to advance the management structure of the organization and to build some resiliency and backups into the organization so that if and when the founder retires, you still have a business that's running day to day.
That makes good sense. And looking down the org chart within a business, obviously, depending on what kind of business it is, you're going to have different levels of staffing or different amount of people that would work within the company. And what we find interesting is like when you have teams that support each of these processes, I mean, if it's a distribution manufacturing company, you could have hundreds of people, software or something, probably less. But in any event, you have people that kind of sit multiple layers down. And what we always find is that like if you just ask kind of the top brass in a company about everyone in the company, it's like it could be an apple, and by the time it comes to you, it's like it's a banana, right? And so there's this, we call it the game of banana phone. But how do you get like a real feel for kind of the supporting staff within a company? Because obviously, like a lot of times when we're selling a business, most of the time everyone wants to retain everybody, but there's always like they want to evaluate, they want to see how to kind of place the chessboard for the new ownership. And obviously, when you step in, you really have kind of like one chance to kind of like announce yourself and position everybody in a way for that next channel of growth. So how do you guys kind of get the insights and evaluate all of kind of the non-managerial people within a company?
It is hard. Honestly, it's hard. I think we've come a long way in that regard. We now insist on every deal that we do one-on-one interviews with key employees, even if those employees have no ownership stake in the business. And I think that you can learn a lot just by having transparent conversations with various employees in the organization. As much as possible, we like to spend time at the company and meet everybody, at least briefly, get a feel for what the day-to-day is like. That's not always possible. Some owners are really nervous about confidentiality and letting their staff know that something's going on. So we can work with that. And in those cases, we really just have to spend as much time with the owner as possible and try and get a feel from those interactions and trust that the tone from the top is accurate throughout the organization. And I'll tell you, we've been wrong on that in the past. And sometimes it worked out better than we thought, and sometimes worse than we thought.